Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price spent some time above the $18.30 per ounce level midway through the week, but the yellow metal has given up its gains since then. It was just above the 1800 mark at the time of this recording, waiting for U.S. jobs data on Friday. I had the chance to speak this week with Rhind of GraniteShares, who said that in his view, inflation is probably the key question when it comes to gold right now. With the overall market not worried about inflation, hedges like gold are facing downward pressure. For Will, a gold breakout will require a loss of confidence in the U.S. Federal Reserve's narrative that inflation is transitory. Leni of Junior Stock Review also shared his thoughts on gold with me this week, saying that although he has a bullish outlook on the precious metal, he tries to focus less on commodity prices and more on the price-to-value ratio. In other words, if he can find a company that's selling for less than he believes it's worth, he's not particularly concerned about what commodity it's focused on.
And I've learned that firsthand. Unfortunately, I've lost money by focusing too much on the metals market and then investing my money in companies associated with that metal. And so I think I've learned that lesson. So for me, what directs my investing is the price to value ratio. If I can find value in a company or a company that's selling for less than it's worth, it doesn't really matter to me what metal they're exploring for or developing.
Brian also broke down the pros and cons of investing in gold juniors versus producers. And with that in mind, we asked our Twitter followers where they see the most opportunity right now: gold juniors, developers, or producers. The poll was ongoing at the time of this recording, but most respondents voted for the juniors. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Aside from that, INN looked this week at the battery metals sector, which continues to attract attention as the popularity of electric vehicles increases. US-based Tesla is one company leading the EV charge, but is the North American supply chain for EV raw materials in good shape? Experts say it could be better. The governments of the US and Canada have made moves to build out their EV supply chains, especially now that Joe Biden is president. But Andrew Miller of Benchmark Mineral Intelligence said raw materials are still a big question mark. The US has indicated that it wants to work with allies like Canada and Australia to secure the raw materials it needs for EVs. And in general, the experts INN spoke with believe this will be possible. But the fact remains that China is leading the EV game for now, and North America will need to get to work if it wants to catch up. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.